Guys, Jared Wesley here of Live Traders, and it is that time of the week. It is lecture time, and this week, guys, we're going to talk about the 3 pillars of trading, the 3 things you must absolutely positively master to be a successful trader. They are very, very important, so you want to stick around for this one today. Some of them are going to be a little bit different than what you're used to hearing me talk about, and some of them, for the people that have taken professional trading strategies and other courses here at Live Traders, might actually sound a little bit contradictory, but trust me, it's not contradictory, and I'll explain why in the middle of the lecture. But we're going to talk about the 3 pillars, the 3 things you must have, you must master to be a profitable, successful trader. All right, so if you like these videos, please click that like button, hammer that subscribe button. I am Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is the 3 pillars of trading. I could have called it, and should have really, the 3 pillars of successful trading, but it didn't quite fit on the screen, and I didn't want to make the font too small. This is a lecture that I have never done before, and this is kind of back-to-back lectures I've never done, and I'll tie in some of last week's lecture with this week's lecture. However, I said this a little bit earlier today. There are going to be a few things in here that perhaps you guys feel might be contradictory to some comments I've made in the past, but we'll reconcile those before the day is done. But these are the things that you need to be a successful trader, okay, period. And it's not, exactly what you might be thinking, if that makes sense. So we're going to dig a little bit deeper today on that. However, before we do that, before we get into that, we must first look at when will the insanity stop. Interestingly enough, this is not tied to what you might think, right? You're first looking at crypto. Oh, it must be because of everything that's just happened with FTX. No, actually, I got this a while ago, and a long while ago. But anyway, the point I'm making is I want you guys to learn from these things. It doesn't matter if something happened yesterday or if it happened 25 years ago. It's the concepts we're after when it comes to when will the insanity stop, okay? I'm serious. It's the concepts. And the reason I bring these up, for some of you people who think, oh, you're really mean, Jared. That's not very nice to do that. It's not about that. It's learning from other people's mistakes, right? We always try to learn from other people's successes, right? Well, one of the biggest teachers in life are losses. Negative things are one of the biggest teachers in life. So while it is good to learn from people's successes, it's also trying to learn from people's losses, people's mistakes, their errors, because we all have them, and we're doing this to hopefully make you better, right? So starting with almost nothing, I made almost $500,000 gambling, note the term gambling with Bitcoin. I then lost it all in about 60 seconds. I am now $50,000 in debt and will most likely lose my job, my visa status, my fiance, etc., and so forth. Okay? Now, I'm not hammering this person because this person did the unthinkable. They wrote this post to help other people, right? Most people are just looking for a sympathy, right? A shoulder to cry on. This person did not, right? This is a story of luck, hope, greed, despair, and stupidity. Over the past 10 days, I have gone on one roller coaster ride of the full spectrum of human emotion, okay? So my point I'm saying is I respect this person. This is not an easy thing to do because the last thing you want to do is tell everyone about your mistake. The first thing you want to do is crawl into a little ball and cry and then go back into a turtle shell or a cave. So I give this person a lot of credit for doing this. I say that I hope my story will help you, and I really mean that of any of you, right? So the reason this is important is because you can see if you read this whole thing, and I'm not going to read all of it, this person says, hey, by nature, I'm not a gambler. I've never exhibited gambling tendencies before. What's the purpose of saying that? That you're not different, that it can happen to you too. This person's trying to say to you, look, I know you don't think that you're a gambler, and you may not be a gambler, but just because you're not a gambler doesn't mean you are immune to these things. So please pay attention to the story is what this person's trying to say. And I respect it, right? So I'm not going to say much more about it. Lost $500,000 in crypto, $50K in debt, and might lose their job, their visa status, their fiance, etc. Wow. You don't want to be in this position. And look, money is different to everybody. Maybe it's $5,000 for you, maybe it's $5 million for you, but we all have a pain point, and we all have kind of a stupidity factor. This person saying, hey, learn from my mistake, right? I'll be the scapegoat this time, but please take this stuff seriously. So my goal in showing you this is the same purpose. Don't be foolish, guys. Don't be stupid. Anytime you're investing in the markets, in any market, have an entry price, have a stop loss, have a target. Have those three things. Know your money management and your risk management very, very clearly. If you don't, the possibility of loss is nearly limitless. Sometimes, guys, and this is the part people struggle with, sometimes it's more than you actually have. That's called leverage, right? Sometimes it's more than you actually have. That's called leverage. All right, so let's dig in. The 3 pillars of trading success. Dun, dun, dun. The first one we're going to talk about is technicals, okay? That is true, Aaron. Most people, especially in America, are highly, highly leveraged in everything they do, from houses to cars to credit cards to their trading accounts. All right. Technicals. I'm not even going to talk a whole lot about this particular slide. I want to go to the next slide because it will all come back to this, if that makes sense, okay? So, basic question for you guys. Is trading hard? And then the second question is, regardless of how you answer the first question, is do you really want financial freedom and flexibility? So let me ask you a question. Is trading hard? It's a simple question, right? It's three words. Is trading hard? I would say yes, right? We can sit here and talk about whether it's simple or complicated. Like, we can have that discussion, but I would say yes, as a business, this is challenging. Now, to be fair, there are not really a lot of easy businesses in this world because, well, if there were, then everyone would be successful and everyone would start their own business. Right? What makes business, push trading aside, what makes business so hard? One word: risk. Right? I mean, let's be fair here. There's 2 things that make a business challenging: risk and money to start up, right? Capital to start your business, and risk. Well, most people don't have much money. And the small amount of money they do have, they're not willing to risk it. They like the comfort and safety of 9-to-5 guaranteed paychecks. Now, nothing's guaranteed, but you get the point. They like that comfort, that reliability. And this is why many people never start a business, and a lot of people fail when they do start. So yeah, I would say trading is hard, as is every business. I just feel that this business has an extra level and layer of challenge to it because it's all about you. There's no customer feedback, right? When you own a restaurant and the customers say, I don't like that chicken piccata, you're like, all right, well, let's go take a look at that and we'll talk to the chef. If you're doing something wrong here, there's no chef, there's no one coming back to you, no client coming back to you saying, yeah, don't do that again. Other than me, there's no one doing that. So there's an extra layer of challenge here. The other part about this business, as I've said before to you guys, that makes it difficult is you can make money when you go to a 9-to-5 job. And that's really all you can do, right? If you're a salary person, every day you go to work, you make money. If you're a salesperson, you can go to work and make money. You can go to work and not make money. But trading has that third one. You can go to work and make money. You can go to work and not make money, but you can go to work and lose money. Right? And that happens, 10 to 30% of the time, right? That's a challenge that very few people have dealt with before, okay? So yes, trading is hard. Let's move on to the next question. Do you really, and this is rhetorical because I cannot answer this question for you, do you really want financial freedom and flexibility? Is this something you really genuinely and truly want? Okay, and again, don't just cough the words out of your mouth. Yeah, sure, man. We talked about this at mentorship. Words are cheap, man. They're so cheap. They're so cheap that you can spew them out all day long and no one's even listening to you. You're not even listening to yourself at some point. Ever notice that? You talk so much about success, you're not even really listening to yourself. It's just words at this point, not followed by action. I want to go to the gym, but you never go. I want to lose weight, but you never do, right? I want to, but you don't. And you don't, and you don't, and you don't. Well, talk is cheap, right? Walk the talk. Walking the talk is tough. Man, you want to go lose some weight? You want to go get in the best shape of your life? Guess what? That requires you going to the gym. That requires you jogging on the days where you don't want to do it. And there's a lot of those days that, you're stressed from work. You got in an argument with your spouse. You're tired. You're hungover. You're whatever. You don't want to go out there at 5 a.m. and start jogging. You don't want to go lift weights, right? You're driving home from work. All you can think about is you're hungry, and you want to go home and just watch a little bit of TV because it was a super stressful day. Oh, got to make that detour and go to the gym. Not going to do it, though. Talk, it sounds great. Like, guys, we all do this, okay? And I'm guilty myself. It's like this, and I don't know if this is a good analogy. Every time that I go to a Formula One race, or every time that I go to a track day with my cars, I want to be a race car driver. I do. I get in that mode, that mindset of like, man, wouldn't that be awesome? And then reality hits you the next day, 2 days later. You're like, oh, back into the grind. What about that race car thing? Oh, yeah, that was yesterday. Do you understand where I'm going with this? We do this with so many things in life, whether it's like, I really want to change my personality. I'm going to be nicer to people. And you try that for a day and you realize how damn hard it is. And then a week later, you're like, whatever. Right? I'll give you a great analogy of this, okay? Good friend of mine, we went to Pebble Beach, okay? Pebble Beach, car concourse, whatever. Trust me, this will be quick. And there's a lot of wealthy people there, a lot of awesome cars there. And he came back, we were driving back to the hotel. He's like, you know what? Today really was impressive. I love these cars. It was amazing. That motivated me. I'm really motivated, Jared, to step up in my business. I'm going to take it to the next level now. I want to do better. 2 weeks later, same thing. Back into the same old routine. That's what you guys are when you talk about, do you really want financial freedom and flexibility? You talk about it all the time with your spouses, with your friends, with everybody you know, but you don't actually do it. Okay? So let's go to the next slide. All right? Exceptional technical understanding. When I said technicals, this is what I meant. We use technical charts to understand when the odds are in our favor. Okay? That's how we determine when the odds are in our favor, by those little technical charts. Then, once we understand when the odds are in our favor, we then exhibit the patience to wait for that moment. Right? We're scanning, we're looking, we're scanning, we're looking, we see it. Okay, that's the patience. And then finally, we show the discipline to handle the situation properly, regardless if it works or fails. This is the challenge for people. I think many of you have a general understanding, a good enough understanding of when the odds are in your favor. Now, some of you don't, but many of you do. But do you exhibit the patience to wait for that moment, or are you just throwing crap at the wall? And do you show the discipline to handle that situation when it arises? Meaning, when that situation arises, do you have the confidence to push the button? After you have pushed the button, what's your mental attitude, whether it works or fails? Do you get nervous? Do you get jittery? Do you sell too soon? Do you hold to the target? Everyone says they want 2R, 3R, but then they end up getting half that because talk is cheap. Talk is cheap, super cheap, okay? So are you doing these three things? Because this is what exceptional technical understanding means, all right? Now I want you to think about this for a second. Really, all right? And I kind of used a semi-similar analogy last week. Gonna go cheap on safety? You want to go wingsuiting. Okay, I'm not saying you do, I'm just commenting. You want to go rock climbing? Maybe you do, maybe you don't. How seriously would you take your safety if you chose to do those things? Now, if you were this guy hanging on this cliff, which is beautiful, by the way, would you be going to Ace Hardware at your local hardware store buying some string? Hey, this string will hold me up on the mountain. I'm good. Hey, this little thank you plastic bag, that looks like a good wingsuit. Let me ask you that, seriously. If you were to go wingsuiting or rock climbing or parachuting or whatever you want to call it, how seriously would you take your safety? I'm looking for answers. Little serious, kind of serious, sort of serious, really serious, super crazy serious? You're going to go to the dollar store and buy your mountain climbing equipment? You're going to go string something together with a bunch of paper bags from your local Safeway or Acme or whatever, Fry's or wherever it is you shop? And you're going to kind of just put your little wingsuit together. You're just going to jump off a mountain, baby. Whoo! I hope it works. Do you see where I'm going with this? How seriously would you take your safety? And the answer for most people, hopefully everyone, would be extremely seriously. Why? Because the consequence to it is pretty dire, pretty extreme. If your rope breaks, you have a problem. Because the picture I'm looking at, there's nothing below him. In both of these pictures, there's nothing below him. So then you got to ask yourself, genuine question, serious question. What the F are you doing? That's it. What are you doing? Think about it for a second. Where are you going to get superior technical knowledge? Where are you going to get it? You're going to get it from, many of you are probably too young to know this, because this hasn't been on TV for a long time. This is the E-Trade baby. You guys remember the E-Trade baby? Some of you probably don't even remember the E-Trade baby. You're like, oh my gosh, I'm 12 years old and I don't remember the E-Trade baby. Okay? E-Trade used to have TV commercials with little babies in it. And you can see by the little BlackBerry in his hand how old this is. Stacks of money. Okay? This is kind of like the Geico commercials. It's so easy a caveman can do it. Right? So easy a caveman can do it. All right? So you sit there and you go, where are you getting, how are you getting, from whom are you getting superior technical knowledge from? The E-Trade baby? Are you getting it from professional trading strategies? Are you getting it as some guy online or girl online you've never heard of? Like, where are you getting this knowledge from? And I'm not simply saying you have to get it from professional trading strategies. I think it's a good idea. I'm simply saying we just acknowledged that this is a difficult business. You all said yes. You all told me that, hey, I want the freedom and flexibility this career offers. And then on the next slide, when we talked about safety, because, the extreme risk of rock climbing, you all said, hey, I would take that very, very seriously. But yet, you all tell me how badly you want this, how much time and effort you're going to put into it, and yet you cut corners everywhere you go. Oh, that tracking spreadsheet from Trade Review is too expensive. Oh, that scanner from TC2000 is too expensive. It's all I hear. It's this and it's that. Well, then you're just not that serious. Because this isn't rock climbing to you. Right? And I've used this analogy before, but sometimes you hear this from boxers that come off the street. They sit in there and go, I can't ever go back to that. So I have to win. I don't want to win. I have to win because I'm never going back to that. This is the problem. You guys are too soft. You don't have to win. You kind of sort of want to win, but you don't have to win. This doesn't have to work for you. There's a backup plan for you. Well, you're soft. And you just talk and talk and talk. I'm going to do that someday. If I would just, I should just. But you don't, and you don't, and you don't. It's a joke. It's an absolute joke. Okay? And then we go back to the superior technical knowledge. Do you understand this chart? Is this a good or bad trading? We looked at this last week. I don't know. Maybe. Maybe not. I don't know, because I don't have superior technical knowledge. I don't have extreme great technical understanding. So you don't know. And then you don't know what to do when you don't know. And your ego says, just take it. Because I don't know. Just take it. You think about all this stuff. At the end of the day, the problem here is just about every other business out there has kind of a roadmap, right? There's some type of roadmap. There is no real roadmap in trading unless you find someone who gives you a roadmap, right? Professional trading strategies will give you a roadmap. But otherwise, you're just kind of hacking along, and it can be a very expensive endeavor when you have no idea what you are doing. Okay? You see, I'll stick to the restaurant analogy. You want to open a good restaurant, you can always find a great chef. Maybe you go to a restaurant that you really like, and you go to the chef and you're like, I'd like to hire you. I'm opening a restaurant. I'd love to hire you. Well, that's a good start. You can't go into trading and say, you know, Jared, you're a great trader. I'd like to hire you as my trader. No, I'm not going to trade for you. I'm not going to do it. So how are you going to do that here? Okay? How are you going to do that here? You're not. Exactly, Brett. It's not expensive. Your other business costs $60,000 a month. Okay? How do you know this is any good? Right? How do you know that this is any good? The answer is you don't. You might see someone like me, oh, I made $3,000 off it. It must be okay. But if you don't have superior technical knowledge, you don't know that this is good or this is bad. And guess what? Superior technical knowledge means different things to different people. And we're going to talk about that a little bit later. Anwar and I disagree all the time, but yet we have the same foundation, but we disagree all the time. I'll save that one for a little bit later. Okay? So, the point? You can't casually commit to this. You're either going to get superior technical knowledge, extreme technical understanding, and you're either going to do it right or you just don't do it at all. Now, I know, you know better. I know. You went to some school, you have a certain IQ. I don't know. Everyone in your family is successful, so you will be too. Whatever the excuse is, I know. And I also just know 2 or 3 people in the last 2 weeks that quit, that told me when they started that they are different, that they would be the person who is going to prove me wrong. You'll see, Jared, a couple years from now, I will be on your list of people you talk about regularly in the chat room. Gone. At least 2 of the 3 had the courtesy to send me an email. Gone. What happened to them? What happened? You don't understand. See, guys, it's easy for you to hear that stuff. It would be different if you were in my position and you actually read what they wrote. If you actually read what these people wrote, you'd be like, damn, okay, maybe this person is different. I mean, that's a pretty strong email you wrote. I mean, I am different, Jared, and here's why I'm different. I'm going to make sure that I am a success story you don't understand. This has to work for me. I don't want this to work, Jared. This has to work for me. Bullshit, you're gone now. You're gone. I said it to you guys a week ago, and I'll repeat it. It's like that college professor the first day of medical school. And he says, everybody in the class, stand up. You've heard this analogy, but I love it, so I'll do it again. Stand up. Look to your left. Look to your right. By the end of the semester, that person won't be here. But, nope, they won't be here. That's it. Not me. I won't be that person. Right. Look to your left and look to your right. They won't be here. It's the way it is. So, the point is, you need, as a pillar of success, you must have excellent technical understanding, extreme technical knowledge to be very good at this business. Okay? But it's not in the way in which you think, which I'm going to get to in a couple minutes. See, the book, PTS, which you have to have, professional, it's a foundation. It's a foundation. It's not everything, which, hint, hint, we're going to get to in the next 2 pillars. It is not everything. It's only one pillar. Without all 3, none of them stand alone. I want to make that point one more time. If you don't have all 3, you are not going anywhere. 2 of the 3, not good enough. 1 of the 3, not good enough. All 3. All 3. So the first one is extreme, significant, superior, excellent, outstanding technical knowledge. Where do you get it? From professionals. Let's move along. Second pillar, probabilities. Mathematical probabilities. You need to understand them. This business has some math in it. No, you don't have to have your PhD, okay, in mathematics. You don't have to be taking, AP calculus in 7th grade, okay? I don't mean that, but you have to have some level of understanding about mathematics and probabilities, okay? And I'll explain a little deeper, all right? And it's, again, not necessarily what you think. And this is the part where you might think I'm contradictory, but I'm not. So, do you understand the odds? Didn't we just do a whole lecture on this? Are you just rehashing that lecture, Jared? No, I am not. What reward to risk is needed to take a trade, guys? Talk to me. I want audience participation. What reward to risk is needed to take a trade? Talk to me. What reward to risk is needed to take a trade? It's very quiet. 2 to 1. Depends on the management. 2 to 1 for me. Depends on your plan. 2 to 1. Depends on that. What do you guys like? Get a room. Every other comment. Look at you guys. The first 10 comments. It's 2 or depends. 2 or depends. I don't know. Following your plan on my second time around. Depends on the person. 2 to 1. Winners must be bigger than your losers over the long run. Do they? Is that an actual... Okay, let's stop with Scott's comment. Winners must be bigger than your losers over the long run. Is that a statistically accurate statement? Do they have to be? Do winners have to be bigger than your losers? Not statistically. No. You may have an 80% batting average. Your winners don't have to be bigger than your losers. Right? This is where we go back. There's so many different thoughts and opinions on this topic. What reward to risk is needed to take a trade? We have some people in here that think scalping is no way to trade. We have other people in here that think scalping is the only way to trade. Right? Risk to reward is a very misunderstood topic. Okay? There's so much that depends on what you're trying to accomplish, what your expectation is for trading. There is no specific risk to reward that is needed to take a trade. Depends on the trade, depends on the person, depends on the plan, right? Depends is the answer. Is it possible that two excellent, outstanding traders can disagree about the same chart? Is that possible, guys? That two outstanding traders can disagree on the same chart? Now note, I put this in here on purpose. Excellent traders. Excellent. Outstanding traders. Is that possible? Newsflash. It happens every day. Every day it happens. Right? And you sit there and go, well, how is that possible? Because our expectation, our approach might be different. Right? It might be different. And maybe one person's wrong. Maybe they're both right. This is what makes the market go round and round and round and round. Now, why is this so important? It's so important because it comes down again to probabilities. It comes down to expectation. It comes down to risk to reward. We just may have a different approach. And you both might be right. And we talked about Amazon today. Higher or lower? I don't know. What's the market going to do? What's the expectation for the trade? So I'm going to talk more about this in a minute. Okay? I'm going to come back to this one in a minute. Is the chart the only thing that matters? Oh boy. That's a tough one, isn't it? Is the chart the only thing that matters? Give you guys a little extra time on this one. We're having a kind of a mixed bag. The answer is, survey says, No. How many times have you guys taken a good trade and effed it up? How many times have you taken a good trade and just completely screwed it up? I don't know, half the time, all the time, most of the time, some of the time. The answer is definitely not never. It's definitely not that. How many times have you taken a stock or a trade that looked like a great chart, it's a perfect chart, and you messed it up? You got out too soon, you sold it for a small loss, and then it eventually worked. I mean, I go on, I can give you a list of things. Is the chart the only thing that matters? No. First of all, if this is a 3-pillar lecture, and we're only on the second pillar, and the first pillar is technicals, then that's the obvious answer, right? So I want you guys to really give it some thought. If the chart's the only thing that matters, then why is Mark Douglas in business, right? Why would a guy like that even be in business? I mean, psychology, right? There's so many things that matter. You could have a beautiful chart, horrible reward to risk. Oh, you could. You could have a perfect chart. Could you not have a perfect chart and it's the worst timing in the world to take it? But the chart's perfect. Of course. Of course. You hear me say it all the time. Wow, that's a beautiful chart, but I wouldn't take it right now. Why? Wait for it. Probabilities. The probabilities are not in your favor. Sometimes you look at, quote, a great chart, and the probability of that trade is not great. Maybe the average trading range isn't good. Maybe the market environment is good. Maybe there's a news report 2 minutes from now. And the list goes on and on. Probabilities. You look at the overall picture and go, that's just not a good probability right now, even though that chart is great. Right? So you look at that stuff and you go, no. Now, what happens if you're wrong on a trade, guys? Let me ask you a question. What happens if you're wrong on a trade? Talk to me, right? If you're wrong, what happens? Just last question. If you're wrong on a trade, take a trade and you're just wrong. What happens? Take your stop loss. Take your stop loss and review. You lose money, okay? Then you're wrong, you learn from it, you move on. Guys, this is a very simple but super crazy important question. The only thing that happens when you're wrong is you lose an R and you move on. That's it. Losing is part of winning, okay? Losing is part of probabilities. No one has 100% batting average. No one, okay? That's it. So if you can't accept and understand losing, it also means you don't understand or accept probabilities. Because the probability of you losing is also highly dependent upon the reward to risk that's needed for the trade you're taking, and whether or not you lose more than you win. You could lose more than you win, and that's okay. You could win more than you lose, and that's not okay. So when you lose, it's just simply a product of winning. Winning's a product of losing. They're both a product of each other. Both will happen for successful traders, and both will happen for unsuccessful traders. The question is in your expectancy. Can you handle a loss and move on? And this goes back, again, to probabilities, but it also goes back to technicals, but it also goes back to the next topic we're going to talk about here in a minute, but we're not there yet. Okay? Do you understand your probability when you take a trade inside your trading plan? Most of you will say yes, but you have no idea. Ollie brought this topic up a week or two ago. Do you understand? Do you know your risk of ruin? Do you know the possibility of you losing 10 trades in a row? Literally, do you know the statistical probability, given your strategy, 3R all or nothing, whatever it is, of losing 10 trades in a row? 99.7 of you don't know that. So the question is one, why? And two, it's okay to lose. But how often you lose is a product of how often you win and what your expectancy is when you take a trade. So you can have a 20% batting average to be the world's best trader and an 80% batting average to be the world's worst trader. But you have to still be okay with losing because everyone does it and you do too, and you will continue to do it. All right? So all of this falls under the learn a strategy and an entry. Why? Because once you've learned your strategy and your entry, you start with your bias, then you have a strategy and you have your entry. Those are going to help you better understand the reward to risk that is needed to take the trade. So we're going to go back to the technicals, right? The technicals will help you better understand how often you win and how often you lose. And you won't know that until you've taken some trades, which we'll get to here soon. And once you understand, then you can meld your management and your expectancy into your style, strategy, and entries. It all comes into one. Okay? Now, finally. Oh, he's finally on a chart. Oh, I can finally pay attention now. I was kind of tuning you out there for a second, Jared. All right. This is a 60-minute chart. Is there a trade here? Yes or no? Is there a trade here? Yes, I'm looking for your participation. Maybe? Yes? No? Positively yes? Positively no? Maybe? There's a reason I'm bringing this chart up. Because it goes back to this. Let's go back for a slide. Because it goes back to, can two excellent traders disagree about a chart? Yes, then we already decided that yes, this is possible. Two excellent, outstanding traders can disagree about a chart. And we're going to go back to the chart. It's a 60-minute chart. Let me ask you another question. If you are an intraday trader, can I use the 60-minute chart as my time frame of bias if I am an intraday trader? Yes or no? Can I use the 60-minute chart as my time frame of bias if I'm an intraday trader? The answer is yes. Absolutely. In fact, it's probably the best time frame to use. Therefore, I can, in this particular scenario, probably disregard the daily because the 60-minute is showing me likely what the daily would be, and it's pretty obvious if I brought up the daily, we have basically a consolidation here, right? If I were to bring up the daily from 58-ish to 60-ish, we have a consolidation. Okay. I'm commenting because somebody said, well, check the daily first. Probably don't need to, but now let's take a look at this. Okay. Now we're on a 5-minute chart. Entry 6105 right here. Entry 6105 right here. Good entry, bad entry, total crap. What do you guys think? 5-minute chart. Good, bad, terrible? Not for you, don't know, bad, same stock, crap, I would not have taken it, no. Okay. It's what makes the world go round, isn't it? And this is where you guys are going to say, Jared, you're contradicting yourself, man. I'm not seeing it. Yuck again. The second entry looks better as it's approaching the moving average. Really choppy, no direction, not taking it, need a higher time frame, need reference. Okay. Very clear answers from many of you, and you mostly seem to be on the same page. Okay. Is your opinion still the same? Has it changed? Is your opinion the same, or has it changed? Same opinion? Same opinion? Okay. All right. All right. So now let's take a look at this. Let's talk about it. Guys, one of the most important things that many of you miss as traders is the carryover list. It's right in professional trading strategies. It's absolutely 100% in professional trading strategies. It's stocks that were on the gap list the previous day that perhaps did or didn't perform as expected. Okay? And oftentimes those stocks will run on the day or two after the gap, even if it was a nice gap and worked. But a lot of times these gaps don't work. Sometimes they don't work. And then the next day they go and you're like, oh shoot, I should have taken that. Well, we can see the gap here on this day. I mean, gapping over the pink line over a daily consolidation. And guess what? It didn't do a whole lot. Gapped up, pulled back, popped up, pulled back, kind of chopped around. The next day did the same thing. But note this bottoming tail right here on this green bar, big bottoming tail. Where? Support. Pulls back the next day, leaves another bottoming tail, and before the day finishes, starts to climb back up. Where? Support. Now I have a double bottom retest after a gap up in an area of support. Now, I will give you this. There's a little bit of overlap right here. All right? But I should have room back to 61.50, maybe a little junk here, and maybe back to 62. You wake up, the stock starts to move higher and then just starts to chop around. But notice, every single time it gets down to 60.90-ish, give or take, right? 60, 90-ish, whatever that is, it bounces, pulls back, it bounces, pulls back, it bounces. Now, guys, what's under you again here on this pink line? Right in like this, just to give you an example, this blue moving average, that's $60. It's $59.99 right there. So we're at like 60.50 here. What happened the first time it hit 60.50? Ripped. Second time it hit 60.50, ripped. And now this stock's pulling back to 60.80-ish, 60.90, 60.90, and it's bouncing every time it gets there. Every time. Here, it bounced once. Here, it bounced twice. Here, it bounced a third time. Here, it bounced a fourth time. So let me ask you a question. Serious question. And this is the part where you're going to think I'm contradicting myself. If we know twice already on a higher time frame, 60-minute higher time frame, that this stock has bounced at 60.50 two times in a row, and 60.50 also represents support, because remember, the ceiling becomes the floor. So we break above this pink line on the 60 and it becomes the floor on the way back down. We break above it again, we retest it, it becomes the floor again. We know 60.50 is holding like a rock star. And then we go to the next day and it's holding even tighter. It's holding even tighter. And every time it gets to 60.90, it bounces, bounces, bounces 4 times in a row. So let me ask you a question. Do you think it's probably going to go higher or lower? What do you think? It's above the moving average. It's above both moving averages on the 60. It's bounced off support twice on the 60, and it's bounced off support 3 or 4 times on the 5. What do you think is going to happen? Only one person's got the stones to come out and say higher. Remember, we are on the second pillar of the 3 pillars. And the second pillar is probabilities. Probabilities. There's no guarantees, they're probabilities. Say that. Write it down. There are no guarantees, there are only probabilities. Okay? So, the question now becomes, why wait for 61.20? Why pay up an extra 15 cents? When you're pretty well sure the probability suggests higher prices. And then what do you do to mitigate? Give it more room on the stop. And then what do you get to do when it breaks 61.20? Talk to me. I want to hear it all at the same time. So you get in at 61.05. You give it more room because we know where the support is, 60.50. Give it more room. And then once it does do what you want it to do above 61.20, what do you get to do? You get to add and then raise your stop up to this 60.80, 60.90 area. Right? This is a professional trade. One we don't talk very much about. And there are some people in this chat room that you guys are getting very enamored by that do this all the time. You don't even realize they're doing it. You know what's happening? You're trusting some of those people because they're good. But you're not fully understanding the trades they're taking. You're just taking them because their name is associated with good trader, making lots of money. But I know damn well you're not fully understanding the trades they're taking. These are the types of trades that some of those traders take. They're buying the bottoms of bases. Have you ever seen Unmall bid at VWAP at the bottom of a base, at the bottom of a buy setup? Not the trigger point of a buy setup, the bottom of a buy setup. Right on a bottoming tail or right before a bottoming tail, right at support at VWAP? The answer is yes. Now, obviously, recently has been more focused on options. But when he takes stock trades, he fishes for the bottom frequently. Okay? Now, if this doesn't break 61.20 and it stops out, what happens? Wait for it. What happens if you're wrong on a trade? What happens if you're wrong on a trade? You lose an R. That's it. Now remember, I want you guys to take good trades. I want you to put the probabilities in your favor. But let's be fair here. I'm not risking my kid's life on this trade. It's just a trade. Now, this isn't carte blanche to just go take crap. But this is a well thought out trade. This isn't crap. You're getting in before everyone else. Guys, real quick, I just basically explained to you Unmall's approach to the market, and all you guys are sitting here going, no, I wouldn't do it, I wouldn't do it, I wouldn't do it, yet you still take his trades. Now, obviously, there's differences. I'm making the point. Unmall has said this repeatedly. I get in when everyone else is looking to get out. Yes, he says this. And he's a damn good trader. And every one of you, not one of you said you would take this trade. And yet, if he called it, you'd be jumping right in at 61.05. I don't know, I just trust the man. See where I'm going with all this? You don't have to take his trades, Matthew. But tell me I'm wrong that there won't be a bunch of people that do. And some of which just said, I wouldn't take this trade. But if the Unmall stamp comes with it, I'll take it. I don't really understand it, but I'll take it. If the Cliff stamp comes with it, you'll take it. Maybe you don't understand it. This is a well thought through trade. Trust me, this is a professional talking through a trade. This isn't some hacker. The probabilities here are higher prices. You are above the 50 MA and the 200 on the 60. You have a double bottom retest. You're above the 50 MA on the 5. You've consolidated in a very bullish manner, and every time it comes down to 61 to 69, it bounces, 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 bounces. Whoa. The odds suggest the next time it does that, it's going to bounce. The probabilities suggest it's going to bounce. Okay? So if you don't understand the trade, certainly do not take it. This is not an arguable point. But that also means if someone else you respect calls it and you don't understand it, you shouldn't take it. And we all know damn well that that doesn't happen. We can lie to ourselves, patronize each other, but you all know when someone that you respect calls it, you're like, well, they don't seem to lose very often. I think I'll take it. Okay? Cass is hitting the nail on the head right there. We won't always be here. Become your own trader. And this is exactly the point of this. Thank you, Cass, for saying that. Become your own trader. We use professional trading strategies as the foundation, because if you don't have the foundation, if you don't even know what support or resistance is, you're lost in space. You have to have the foundation. You have to understand the rules of the game. But there's a lot of different ways the game can be played. This is what I'm getting at. The rules change. No, the rules are the same, but you can play the game differently within those rules. Some people pass the ball more, some people run the ball more. Some people blitz more, some don't. But they're all in the same rule book. Okay? Professional trading strategy is a must. It's the foundation of your success in this business. But this will bring us very shortly to the third pillar. Okay? But I'm going to hold off yet. Should we take each trade seriously? Yes. If we're wrong, what's the worst that can happen? We lose an R. Therefore, why wait if you know what's going to happen? It's what we just talked about. I'm taking that trade seriously. I am looking at that as a quadruple retest inside of a double bottom retest on a 60 above the moving averages showing strength. Seriously took that trade. If I'm wrong, I'm going to lose an R. Oh, well, and I'm not going to wait for it. And if it breaks the area, 61.20, I'll add to it and raise the stop. Know the odds. And then the only question after knowing the odds is, generally speaking, does your strategy give you an edge? Okay? So, oh my gosh, Jared, you have just gone off the deep end. Coming from the man that constantly says PPRF, 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 perfect patterns rarely fail. Guess what? Truly perfect charts don't exist. Perfection means exactly that. It means 100%. Nothing works 100% of the time. Perfection does not exist. Odds exist. Probabilities exist. Our goal is to put the probabilities as much in our favor as we can. And to one trader, it means this, and to another trader, it means that. And thank God it does, because that's what makes the market move. We don't want everyone agreeing with us all of the time. And that goes for individual opinions, even within the chat room. Crazy. You guys are going, Jared, what's going on today? Did you lose your mind last night? No. You still need to learn charts. You still need an edge. You still need to understand management. You still need to understand what works for you, in capital, for you. For you. When a trade doesn't work as planned, I see too many people get incredibly obsessed with learning more about charts. Now, I am not saying you shouldn't try to be better. The goal is to always be better. But it might not be the charts that are the problem. It might be your management. It might be your psychology. It might be your market timing. It might be relative strength. It might be a lot of things. But don't just go and look at charts every time and go, that's the answer to everything. It's not the answer to everything. Charts are not everything. Perfect charts don't exist. Odds exist. Probabilities exist. Okay? Sometimes that's not the problem. I think a lot of you in here that are break even or slightly successful or slightly underwater, you take good enough charts to make money. But that takes us to the third pillar of success. Experience and mindset. Oh my goodness gracious. Experience and mindset. Talk is cheap. Right? Talk's cheap. Nothing in this world replaces experience. Nothing. And that should be dead obvious to you. there's not a single person that graduates college and on the first day doesn't receive training. Why? Because you have no experience actually doing that job. You went to college, so what? You drank with your friends, smoked some weed, so what? What'd you really learn? You learned from an armchair warrior standing in front of the classroom. Great. Maybe they taught you some good stuff. Got you a piece of paper with a stamp on it. Great. The first thing every company does is put you through more training, and then you start to gain experience. The real world is very, very, very different than the classroom. And that includes PTS. The real world is very different than the classroom. The concepts are correct. The application, oh man, that's totally different. So you need experience and mindset. And no, it's not a fourth pillar, they're together, because the mindset determines the type of experience that you have. All right? So knowledge without experience is just an idea or a possibility. That's all it is. Right? You have all this knowledge, but you've never applied the knowledge. Okay? Book knowledge is nice, and it's absolutely necessary. It really is. You have to have a foundation. You have to have a starting point. Otherwise, you're just blowing in the wind. But experience trumps everything. Experience is king. It is literally everything. You can sit here, we talked about it today, and you can think something's true till you actually try it, and then it's not true. You can backtest something, and you think it's true till you actually try it. JW can be up 20R a month till he actually takes those trades. Never met a losing paper trader. Experience is everything. You might do something that is completely, totally, and utterly the opposite of what I teach. But your experience and results prove it's okay to do it. Cass has a different approach to trading than I do. Anmol has a different approach to trading than I do. We all have the same foundations. We all believe in technicals. We all believe in support and resistance. But our application of support and resistance and technicals with regards to strategy and entry vary quite a bit. Experience is king. From his experience, he does it this way. From Anmol's experience, he does it that way. And from my experience, I do it this way. So yes, you need superior technical knowledge. You need a foundation. You need professional trading strategies. But until you take that course and that book and you meet it with real live trading, real money, real markets, real slippage, real mentality, real psychology, you are nothing. This is why we tell you, don't stay on a simulator more than 4 to 6 weeks. Learn the buttons, right? Learn your platform. Get to real money quick. Why do people struggle to keep weight off? You're like, Jared, that's a weird comment. No, it's not. Because the idea of it and the experience of it are two different things, aren't they? Wanting to lose weight's an idea, right? That's knowledge of saying, I'd like to lose weight. But until you experience losing weight and what it takes to do it, you can't say that you'll actually do it or how long you'll be able to do it for. Every January, people, gym membership skyrockets. By March, back down to where it was in December. Why? Do people not understand what it takes to lose weight? Are they incapable of learning? Do they just don't know how? Do they really believe that eating a Snickers bar is better than eating carrots? Well, I can't think of too many people that would tell me that Snickers bars are better than carrots, but yet they can't keep weight off. Why is this? Are people just that dumb? You don't believe that, do you? You don't believe that people think M&Ms are better than lettuce? Knowing what to do versus doing it. Completely different, right? So, does learning technical charts and trading knowledge in general, does it really take a rocket scientist? Does it take a genius? I don't believe so. I don't think it takes a genius to show people red and green bars. It takes a little bit of intelligence, but you certainly don't need to be a rocket scientist. So why is it so hard? Why is it so hard for people? I mean it. Why is it so hard for people to keep weight off? Why is it so hard for traders to make money? Why? We've just discussed getting superior technical knowledge takes learning from a professional. We've also talked that learning from a professional, you don't need to be a genius from. But yet, it's so hard. Oh, there it is. Am I crazy? Your mental approach actually matters because it affects everything you do. It affects how you see the chart. It affects whether you pull the trigger. It affects how you manage the trade. It affects whether you go on tilt. Basically, it affects your success or failure. Your mental approach affects everything. But, oh my gosh, Jared, full circle. Holy shnikes, let's go way back. What are we doing? Talking about when will the insanity stop? We already covered that. What are you doing? This person says, quote, "Let me start off by saying I am not a gambler. I have never exhibited gambling tendencies before. I have always considered myself responsible, and I have a sound understanding of the maths behind gambling." What? So why is trading so hard? Because experience is different than book knowledge. The book knowledge, everyone knows the odds. Everyone knows what they're supposed to do. But the experience proves what they actually do. Mike Tyson, everyone's got a plan until they get punched in the mouth. Mic drop. That's it. We can end it right here. I have a couple more slides and we could just end it right there. Everyone has a plan until they get punched in the mouth. You all have a plan. You all read the book, took the course, until the market punches you in the mouth. Then what? Plan goes out the window. Psychology goes out the window. Everything goes out the window. Okay? Everything goes out the window. But I'm not a gambler. But experience shows us otherwise. Okay? Guys, you have to be deliberate in your approach. Patience is a learned trait, usually from the pain of not having patience. I'll repeat it. Patience is learned, and it's usually learned from the pain of not having patience. Think about it this way. You might find this to be a dumb example. I'm saying it because it's a real example. I'm laughing as I say it. I am not a patient person waiting for rides at Disney. Okay? We went to Disney. Now, I want you to think about this. You're going to laugh at it, but you're going to realize there's a lot of truth in this. Wife, kids, and I, we went to Disney. Okay? We're waiting in line, and the sign says, hour and 30 minutes, whatever the sign said, okay? Waiting in line with the kids, and we're like 45 minutes into this, and I'm starting to get ornery. Like, F this. This is stupid. I'm mumbling under my breath. My wife can see my face has changed. I'm not chit-chatting with the kids. I'm not joking with the kids anymore. It's getting to me. And I start acting like an ass, right? And she gives me the riot act. And you know what? Who's right? Who's right? Me for being an ass or my wife for giving me the riot act? Who's right? Who's right? Her or me? Other than the fact your wife is always right. Take that aside. She's right. She's right. You know why she's right? Because in no part of that experience, in no way, shape, or form did I go into that without knowing. I knew the second you say, yes, let's go to Disney, your patience hat better be on when you're saying that. I also knew when we got in there, the line was really long, and they give you a general understanding of how long you're going to be in the line. Well, why would I go there to Disney number one, and why would I go into that line number two if I have no patience? I knew eyes wide open Disney requires patience, and this specific ride we were on has a long line, and it already gave us roughly the general time. And this is exactly what she told to me. You knew damn well before you walked through the gates of this park and before you stepped in this line, shut the F up, you made this decision with your eyes open. Don't you start complaining now. Now, I want you to take that analogy to trading. You knew damn well getting in on that thing on a 15-minute chart with a slow-moving stock, it was going to take 3 hours to get to target. So why are you bitching after 45 minutes? You knew it. Deal with it. So it goes back to the one, we usually complain about things we already knew beforehand, but we were just hoping they'd be different. Well, no, go in knowing they're not going to be. You chose to do that, okay? And next, patience is usually learned from impatience. And what do you learn from it? Whether or not you have it. If you know that you have no patience, then you're not going to be taking 15-minute charts, 5-minute charts. You're going to be taking 1-minute charts. You're going to trade within those parameters. And you better have patience to be a good trader. Patience to wait for the play. Patience to wait for the target. It's the capacity to accept or tolerate delay, trouble, or suffering without getting angry or upset. I'll repeat. Patience is the capacity to accept or tolerate delay, trouble, or suffering without getting angry or upset. Guess what? That's why people leave the gym. They cannot tolerate the suffering that it takes to lose weight and keep it off. You cannot tolerate the suffering it takes to stick through a trade. And part of that goes back to your belief system. You don't believe it. Because if you believed it, unequivocally believed it, you wouldn't have a patience problem. So that takes us to the next slide. Experience is everything. How do we overcome all of this? One, gain more experience, because the more experience you have, the more situations you've been through. It's the same reason good pilots are usually pilots with a lot of experience, a lot of time in simulators. Why? They've hit every weather condition there is. They've hit the crosswinds. They've hit the headwinds, the tailwinds. They've hit power going out. They've hit, oxygen going out. They've hit all these emergency situations. So now when that situation happens again, they're calm, cool, and collected. Michael Jordan was ice when the game's on the line. Why? The first time he may have been nervous. But after you do it enough times, you're not even thinking. It's unconscious competence. You combine experience with a trading plan. The plan will at first be trivial to you. It will be. You will build a trading plan and it will be trivial to you. Why? Because you've never done it before. Then, through experience, you will begin to learn your pain points, thus making small but meaningful adjustments to your plan based upon pain points. Ultimately, you will learn the patience and discipline to have absolute conviction in your plan. And this is where professionals are. It will take you time, but you will have the experience, enough pain points, and enough knowledge that you have absolute conviction in your plan. And that will come from trust. And the trust comes from following your plan, believing in your plan, and knowing it is your edge. Only through experience does this happen. Go to battle together, and you will learn a lot about yourself and your plan. The only way to learn is through experience. You go out and you test it. You put it to battle. You see, okay, this is my plan. Let's go test it. You're going to get punched in the mouth, and you're going to have to make some adjustments. I didn't see that coming. Now, next time, you'll see it coming. Guys, great people are great because they've seen it all before. You guys always ask me, why are you so calm with this? Or why do you know about that? Because I've been there before. I've seen it happen. It has happened to me before. And people always ask, how did you know that? How did you know how I felt right now? I don't know, because I've been there 1,000 times. I'm not special. I'm not a rocket scientist. I've just experienced it many times, and you are experiencing it for the first time. But unless and until you have absolute conviction in your plan, you'll never be super successful. Okay? So you want to ask yourself, do you have a growth mindset? Do you have a fixed mindset? Because to be a great trader, you're going to need a growth mindset. You cannot have the I can't do this, this work is good enough, this is too hard mindset. You have to have the come take on all people, right? You have to have the I'm going to go get it mindset. I can try a different strategy. Is this really my best? Is this the best I can really do? This may take some time and effort. That's the growth mindset. Lots of people just trade the markets, but most are just playing around, right? Lots of people trade the market. Most are just hacking around. They're just playing, all right? So there are the three pillars of success: superior technical knowledge and understanding, probabilities, understanding your edge, understanding your expectancy, understanding the likelihood of success on that trade, and then the experience to put the technicals and probabilities together in real markets. And that experience will lead to a certain mindset, good or bad, but the experience will amplify your mindset. It will magnify your mindset. Those are the three pillars of trading success. Okay? So, what are you doing each day? You must enter each day with a plan. Do you know what you're looking for every morning? You must know what you're looking for. If not, walk away, leave. This is not a television show. You're not here for entertainment value. You're here for fucking money. Don't be busy, be productive. If you don't know what you're looking for in the morning, walk away. If you know what you're looking for and don't see it, walk away. Take it seriously or do something else. That's it. Guys, just take it seriously or do something else. Look, it's not the lucky who succeed. It's the people who work hard on mastering the charts, identifying the odds, understanding their inner demons, and how to reconcile them. That last part's the key. How to reconcile. A lot of people will get to the point where they understand their demons, but they don't know how to reconcile the demon. These are the three pillars of success in trading. And if you don't do these things, just quit. Don't even look at it as a negative. You're like, well, I'm not willing to do those things. Save yourself the time, effort, and money. Don't go to the gym and look around. Go to the gym and work. Be productive. Don't be busy at the gym. Be busy. Be productive. Right? Same with trading. Be productive. Know what you want. Go and get it. All right? And stop making excuses for it. Okay? So, with that, I hope that you guys learned a bit about the three pillars of trading success. This is perhaps the longest lecture I've done, at least in quite some time. Why? Because to me, it's foundational. It's very, very important. All right? And everything in there isn't meant to be rude or mean. It's meant to tell you how it is. You're standing in the ring with Mike Tyson. Come prepared. If you're not, don't get in the ring with him. That's the market. The market's Mike Tyson. Be prepared. And if not, don't get in the ring. It's too risky for you. It's too dangerous for you. It's not worth it. But if you're going to step foot in that ring, throw a leg over that rope, you go in ready and prepared. All right. I'm Jared Wesley of Live Traders. I hope you guys learned a bit this week. We'll get back at it again next week.